Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts and Sameer Kalra of Target Investing and independent market expert Shahina Mukadam join me on the show today. So today on Hot Money, we'll discuss stocks like Biocon, which is trading clear near record highs. It's outperforming the pharma index. A lot of FMCG stocks have actually managed to correct significantly. So we're asking them, is it a good time to start accumulating some of the FMCG stocks, or is there more pain left? Some of the high value stocks have corrected significantly. One of the exceptions that hasn't fallen much is Page Industry. So is valuation a concern for some of the counters? And Indiabulls Housing Finance has corrected almost 25-30% in the recent terms. Is it a good time to start accumulating Indiabulls Housing Finance, or is there more potential downside? So these are the stocks that we'll discuss at this point of time. The first stock we want to discuss is Biocon. Now everything's gone right for it. Compared to the approvals that it's been getting, compared to the US FDA clearing the Bangalore facilities and some of the products being launched by its partner Mylan. What's the state for Biocon going ahead? Should it be accumulated, or is there more potential? Is valuation now a concern for Biocon? So we'll ask our guest, Sameer. Biocon, one of the most expensive pharma stocks, but it's the growth story that's being played in terms of the biosimilars and the products that will be launched in US and in UK. Is this valuation justified? Do you see more potential upside coming in for Biocon now?
So I think the valuations are more adjusted to the news rather than the earnings right now. If you see the earnings, there's a two different world which is going on. So on the news front, yes, the valuations are still cheaper if you sense the news and you give it a news-based kind of an investment thing. But if you actually see on the ground, on the fundamental quarterly, those news will convert into numbers in next couple of years. This will not happen overnight and change the scenario overnight. And again, I think that has a lot of risk involved. It's not that easy to convert your news flow into the numbers soon, especially when the valuations are high. So I think it's still a stay away from my side, but the rally can continue on the news space.
Okay, so you're saying that the valuations are not supportive of the earnings that the company has done.
So see, even if you see today, the valuations, if you go ahead, is trading around 55-60, right? Even if I do a 30% kind of a growth for next year. So, and that I don't see until unless the launches happen today. Because even if the launches happen 6 months later, then my 2 quarters are gone. And that valuation, when the rollover comes to FY20, which will now currently move, that again keeps it up. But my only point, the actual results, if there's any slighter disappointment also, then the downside is unlimited.
Okay, for Biocon. What about you? Do you agree that valuations are rich, and what's your personal view on Biocon?
Yeah, I think the valuations are quite rich, because while I do agree that there is an upside in terms of the biologicals for which they have started getting approvals, and in the research pipeline there are about 8 to 9 biologicals. They have got strong partners like Mylan, they have got strong partner, the new partner Sandoz. So they are positives, they have got approval from the US FDA for their plant, so they don't seem to be having any issues. But valuations, at around 100 times for the current year, are factoring in the good first quarter numbers. In my view, factors at least 2 to 3 of these molecules contributing substantially to the profitability, which in my view is not likely to happen over the next 2 years, because as of now there is only one approval for the US market. The rest are in various stages of research, clinical research. So from the current level to be valued in line with the other pharma companies, the profits would have to go up by 3 times, 300% to start looking a bit attractive. Like say 20-25 times multiple to bring it to that range, which the other large pharma companies are quoting at. So I think a lot of the upside which is there is factored into the current price. So I wouldn't be buying it at current levels.
Okay. Anything that you like in the pharma space as such?
Yeah, just to add on to, really Biocon, why I would stay away as of now, the major contributor coming over there is the small molecule space, which accounts for almost 35 to 40% of their revenues. And that is facing pressure in the US market because of the consolidation in channel partners. So to that extent, I would stay away as of now. One of the stocks which I personally hold and I like is Aurobindo Pharma. There I think the pain in the US market is to some extent done. So it is bottoming out in terms of the dip that we saw in profitability, in revenues. They have a reasonably strong balance sheet to go in for acquisitions, which they have been doing, especially in Europe. So I think that is going to be a organic type of growth. The products that they have are pretty strong in terms of injectables, and their plants also have got US FDA approval. I don't see too much of problem arising on that front. And to top it all, the valuations are attractive. Okay. I think it is the cheapest stock in the overall pharma space. So there is some bit of comfort in terms of something negative happens. There is only that much the stock can go down to. We've seen the worst case, it's gone down to about 400, 450. So to that extent, it is I would say there is safety.
Okay, well, you are always bullish on Sun Pharma. Yeah. Do you continue to like that, or do you like bullish. Something else on the pharma space?
See, on the pharma space, we have Sun Pharma and FDC. FDC has a local issue, and because it's a local market and the growth is more driven towards the domestic factors. Over there are certain FDC drugs which are being banned. So over there, that's an impact. Sun Pharma, the valuations have gone up. The US FDA has come in and shown another observation letter, but that is rectifiable. But we have reduced the weight on Sun Pharma because of the the currency upside. So we have reduced on pharma and IT. So that's why the Sun Pharma still is one of the top holdings, but it's still down from the weightage. Okay,
so that's the view that's coming in on the pharma space. A clear avoid on Biocon at this point of time, given the valuations and the multiple it trades at. But Sun Pharma as well as Aurobindo Pharma are some of the counters which our guests do believe that could be potential stocks that you need to watch out for. The second space is the FMCG space. Now, a lot of FMCG stocks have corrected, be it a HUL or be it a ITC or even be it a Britannia. This corrected all the way from almost 7,000 right up to levels as close as 5,500. So there is pain in the FMCG stock. So this can go either way. So we're asking our guest, what should you do? Is there more pain? Are there any shorts that you would accumulate at such level? Or do you believe that valuations are still rich and there could be more potential downside on the FMCG stocks? So Shahina, FMCG stocks, crucial point at this point of time. Valuations even after the corrections are still reasonably rich compared to the other peers. What should one do if they're looking at the FMCG space?
Yeah, valuations are rich, and on a comparative basis they have continued to look rich because everything else is also corrected. At the same time, I think the monsoons have been good. We have elections down the corner. So I think the FMCG space is likely to continue to see a reasonably good demand. So I would continue to bet on the FMCG space despite the expensive valuations, because if you see the balance sheets, they are negative working capital companies. So in a scenario where interest rates are moving up, these are protected. And on the other hand, you have increase in volumes, which is expected. So having a look at the comparative declines that we've seen in the overall space, I think my pick would be United Spirits. I think that stock has actually corrected far beyond some of the other stocks, and there being I think recently we've heard this negative commentary that is coming in from the parent, wherein there could be some forex hit. So I think I would be mentally prepared to see a pretty dismal quarter number, and I think it's reflected in the stock price.
So you would use this as an opportunity to accumulate United Spirits.
Yeah,
so what makes you bullish on you said that these are the problems. What makes you bullish and what are the triggers to buy United Spirits?
Yeah, because the negative is the forex, which I think is could be a one-time thing probably, and the positives being that you can't ignore that it is the largest alcohol company in the world. It is in fact in terms of size, if you compare it with any, I wouldn't call it pure FMCG, but in terms of consumer, it is one of the largest, and I would say the quality of the parent is I would say a very big positive. It is available across all the segments. You have the premium segment, they have got good brands. You have the lower end segment, they have got good brands. The super premium premium luxury, they're introducing new brands from the parents' portfolio. So I think while the valuations are not cheap even at current levels, but if I was to pick with a little longer term view, I would.
What about the regulatory risk that it faces?
Yeah, but I think this being the election year, whatever regulatory risk we've had to see, we've seen in the last, I would say, 15 months.
Okay.
And a lot of states have and, come down and have sort of implemented certain restrictions. And we've seen the company trying to tide over it. So I think these are the bad times for the company, almost on all parameters.
Okay. What about you? Your view on FMCG stocks? Anything that you like?
So I think FMCG is quite above the premium of even the 5-year average. They are around 20-25 even after the kind of correction or the dip you have seen. I think the last year was more of a low base year for them, so that's why they showed a lot of good volume growths. And there was an adjustment at the distributor level also between the organized and the unorganized. So that given the kicker to the volume growth. I think this quarter is more important, next 2 quarters for the volume growth to be defined where exactly it'll sit. And there can be adjustments on the downside of the valuations. So I would like to keep myself away from these consumer staples for any fresh kind of buying or even accumulation at this point of time.
You see more potential downside?
Yes.
Which is the weakest in the FMCG package?
So I think certain places, if you talk about a Dabur, can disappoint you on the downside, because what happens, their distribution level has been pushed a lot and now the distribution volume growth has come down, but the retail volume growth is kicking in. So I think there can be a pressure on Dabur valuations. If you see, HUL might come up subdued because the distribution reach is much larger and they are able to adjust the volume growth over there.
Okay, so that's the view that's coming in on the FMCG space at this point of time. United Spirits is something that Shahina likes at this point of time, but Samir is believing that valuations are still much richer and would avoid this space. The other company where valuations probably would be a concern is Page Industries. Hasn't corrected as much as the other companies. It's trading at almost 32,500 at this point of time. Samir, Page valuations a concern for you?
Yeah, surely they are a concern. But the only point is, even historically when they were trading 60, 65, now they are actually going to 70, 75 levels, and there's no amount of correction also being seen as a drastic fall. They're able to show the revenues and the PAT growth, so they have doubled the revenue and the PAT in last 5 years, which is brilliant. But the only point I get worried that if you're doing such, there's no cash flow generation at the level.
Okay.
So the inventory and the trade receivables are the worry for me in the system.
Okay, Page Industry, we need to go for the Aadhaar verdict, and our reporters are standing by. But just quickly, before we end this show here, your view on Page Industries.
I agree with Samir. I think valuations are extremely expensive, and while their major products, brands, innerwear is gaining traction, it is good. But I think there is likely to be a lot of competition coming in. China is likely to be an, I would say, dumping more, of its products into India because US market is closing for it. So I would be a bit wary. I think it's a competitive product and price sensitive.
Okay, so that's the view that's coming in on Page Industries. Avoid at this point of time. We'll have to cut short hot money at this point of time because of the special coverage of the Aadhaar verdict. Payaswini is standing by. Payaswini, over to you.